Would that imply, Professor Varma, when you say 1 or 1.5%, that is the extent of cuts that need to be obviously done in a staggered manner? Is that the right way to understand that part of your statement?
Yes, that if inflation keeps coming down the way way it's being projected, then we will need to keep cutting because the target for the interest rate is always a real rate and not a nominal rate. So it's not that I want to keep interest rate at 6.5% until inflation gets 4%. That's not the way it works. What you do is that you have a target real rate and you say that I want to target 1%, 1.5% real. And then as inflation keeps coming down, you bring the nominal rate down so that the real interest rate remains at the same level. So that's how monetary policy works. That your interest rate must exceed inflation. It must exceed inflation by a sufficient margin to keep bringing inflation down to target. So right now, inflation is still above target. Even 24-25, it will be above target because our target is 4. Even 24-25 will be 4.5. So it's above target. We need a high rate to drive inflation towards the target. Now, the definition of a high rate is a high real rate. So as inflation comes down, you would have to keep calibrating the nominal rate downward and maintain that spread above inflation at a stable level until inflation comes down to target, and then you can lower it even further.
If you like the video, do like, comment, share and subscribe.